So hi guys, welcome back to another episode of the technical breakdowns. So today is on Monday. I'm going to be sharing with you my weekly outlook, the different markets that I'm watching, what I expect to be moving markets up and down, potential good trade setups, markets to avoid, and also just giving you a fundamental roundup of what is going on currently in the economic environment. So to start off, if I just look at the fundamental economic climate, it's very, very important to take we like calling it using a thermometer to measure the market sentiment. So that means looking at different indicators to understand what is really moving markets up and down. Inflation still remains the primary driver of this market. Inflation, interest rates, geopolitical risks, those are three things which are combined well. Geopolitical risks, we're talking about the Ukraine-Russia war. No one knows how long it will last, how it will advance, any other countries that will be involved. I was looking at the update during the weekend, and looks like Ukraine is being defeated by Russia on some territories of their ground. So that will have some long-term impact on the market. Obviously, markets might have to start pricing in some of those things that are going on. The second one is inflation. Inflation still remains a problem in most countries. We've seen rates go up a couple of basis points higher. Markets have priced in quite aggressive rate hikes. If you look at the 10-year yield, for example, it's trading at 3.1. It tapped a high of 3.5, I think. Now slided a bit lower to 3.1. But I think markets have priced in quite an aggressive rate hike for the whole of this year, and I think the sell-off for that is quite done. So what I'm looking for is some potential pullbacks as markets start seeing some optimism, especially if inflation starts coming down. So I'm also tracking that number keenly to see what will happen. Last week we had Powell speaking on giving a testimony for the Senate and the House, which was a bit heated if you follow the debate, and it looks like also inflation is going to be a problem which will persist for so long, and I think markets have priced that in and are planning or rather are moving in expecting some other things. So with that said, I'll just jump down into the technicals. I'll look at 5 markets. I primarily just look at 5 markets on a day-to-day basis. I have other markets that I watch, but on a day-to-day basis, I'll track just 5 markets. Those are the ones I pay attention to. Fortunately, it's a combination of different markets, and if you understand correlations, then you can be able to understand how I'm looking at different markets and how it will affect the markets that you're looking at. So just a disclaimer, this is not investment advice again, so don't use this to make trade decisions and then say, I traded because of this and this. Instead, learn a couple of lessons, and if you're interested in trading, you need a trading account, we will recommend you trade with Pepperstone. Pepperstone is the best broker, and you need to open an account with them. Our links for opening an account are just attached below in the description, so you can follow the links and open your account and start trading, even if it's on a virtual account, as you learn, as you transition to a real account, as you mature and develop in your trading. So let me just go down to the technicals and do for you the technical breakdowns. So to start off, I'll look at gold. I think gold is one of the best markets that I personally love trading. I've been trading gold now ever since I started trading. I think I've tracked this market, and I think there's some interesting things that I'm learning as I'm trading this market and also as I'm looking at it. So you can see, unlike how I normally look at most of my analysis, for this one I started from the monthly chart. Why? There's a culmination of interesting things that is happening. A combination of things. For example, we have this double top formation at the 2000 level after such a long bull run from October 2019 or 2018 actually. We had a bull run all the way to August of 2020, so about a 2-year bull run with market stopping at 2000. We had a slight correction to April of 2021, then we had another move again back to 2000, which ended in March of this year, and we started a move to the downside. So what do I expect will happen in gold, both long-term and short-term? Long-term, I think the trend has changed. We have been moving higher for quite some time, for the last 2 years, but I think that will change a bit as rates move higher, as economies come back to stabilization, as we head into a recession. I think gold prices will get weaker. So what am I expecting? I'm expecting a break of 1800 and a drop to 1700. In the extreme cases, projecting long-term, very, very long-term, probably in the next 2-3 years, we could see gold trading as low as 1500, 1400, coming back to retest these lines. Probably in 2024, 2023, gold prices could remain that weak if the cyclical picture, if the fundamentals don't change. But obviously there's a lot that could change. So I'm extrapolating short term 1700, long term I'm looking for 1400. If I go down to the weekly chart first before going down to the daily chart, On the weekly chart, we sort of have this channel formation. So we've gotten the first bounce, second bounce, and this is the third bounce. 1800 looks like a very, very strong support. We've tried going below the level. It's been quite difficult trading below the level, but I'm confident when we'll get this close below the trend line and the 1800 level and this level, then we will be ripe for a collapse to 1700. But as long as we're above 1800 and things start pricing a move higher, then I'll be looking at 1900 as my other target. If I go down to the daily chart, I have sort of a channel formation which suggests a collapse. So you can see we had the first, second, third bounce. If I just change the slope of the line a bit, then there's a potential of, again, another bounce coming in at 1887, 1900. But as long as you're below the 1875 mark, honestly, I'm still very short on gold. I'm expecting a collapse to 1750. I think we had this collapse from 2000 straight leg, then we came into a consolidation, let's say between 1800 and 1875. But I think this consolidation will end at some point, and when it ends, the market will just break and sell off all the way to 1700 level, which is the next downside target. So that's my outlook on gold. And if I just go down to the 4-hour time frame, I don't think there's much that can be relied on here other than, again, these trend lines that I've just drawn. So first, second, third bounce. If we remain below this 1850 level, 1875 level, then markets could ultimately keep on selling off. If we bounce back, we could go back all the way to 1875 to touch the third trend line bounce on the daily before the collapse to the downside. So that's my outlook on gold. Going down to the next market that I'll be looking at is oil. So oil, we've had 2 years of a strong bull run from April of 2020, I think all the way around May, of 2020, all the way to currently now. Oil has been on the rise, moving from zero, I think when it bottomed in April, to as high as $125 a barrel. We topped at 120. You can see several times we've tried going above 120. It's been quite difficult. The last 2 weeks have been signified by bearish momentum. Do I expect the bearish momentum to continue? Honestly, yes. I'm looking for this market to keep selling off. I'm looking for this market to come back to about $90, $85 a barrel. I think where rates are, where fundamentals are, with where inflation is, as much as there's a problem and high oil prices are priced in, I think there's also a high chance we could start seeing some lift off as things go back to normal a bit, especially in the production side of this commodity. So oil prices 107.5 is where we're currently trading. If we remain below 110, I think there's a high chance we'll visit 100. On the 4-hour time frame, I have this beautiful setup. This is actually one of my favorite setups going into this week. I'm just looking for this potential collapse from the 107.5 mark to $100 a barrel, with my stops coming in around the 110 level. So I do think markets are likely to remain below this level. As we head into London, New York, I'll be watching keenly to see the potential direction of the markets, but I think there's a high chance you could see this collapse to $100 a barrel as oil prices discount the earnings, as oil prices move back to the level where we expected them to be trading. So that's my outlook on oil. No need for the lower time frames. The Dow indexes have come back quite aggressively. Like I've said, I think the rate narrative, the interest rate narrative has been priced in this market. The expectations are well priced in. We've seen a lift off from 35,000 to trade as low as 30,000, almost a 20% collapse, because if I just extrapolate, 15% would come in at about 35,000, 15% would come in at about 30, 29 something, 28 something. So we've gotten a collapse from about 36,500 to 30. That's about a 6,500 point collapse. Then we've started getting a pullback. So this could act as a very good level of support. We could start seeing these markets come back again, lift off a bit as more people buy into the dip. I think there are some bargains which will be collected obviously by long-term investors. You need to remember as you're trading, as much as you have a short-term horizon, there are people who have a long-term horizon who will participate in markets, and that will cause a shift in supply and demand from time to time. So looking at it from a daily perspective, we have first, second, potential third bounce at 34,000, but again we have first, second, potential third bounce at 32,000. That's the big question. Is it 32,000 or 34,000? I think personally I'd favor 34,000. I think there's a high chance you'll see a deeper pullback at least. Bear markets are also followed by very big rallies when we have bear markets. We also have a lot of potential bull rallies because people will take advantage of the cheap prices that are there. But I also think we could still see some downside momentum. On the 4-hour chart, you can see clearly we're trading above 31,500. If we remain above the level, then markets could hit 32,500. If we break below 31,500, I think we could come back to 31,000. Bounce off this line, potential third bounce. This would also make up for a very, very good setup. If it plays out, we could see this lift off, this collapse again, to this level, 31,000. And if we touch 31,000, I think 32,000 is the next level that I'd be looking for in this market as we are heading further. So that's my outlook on the Dow. Next, I look at GBPUSD. So GBPUSD is more or less behaving inversely to what the dollar is doing. The dollar has been getting way, way stronger, and the pound has been getting way, way weaker against the dollar. If you just look at it from the weekly chart, you can see the pound has slided from the 1.3538 level to trade as low as 1.2. If you look at it from the monthly perspective, there's a high chance the pound could break 1.2 and create a new low that has never been seen before. I wouldn't be surprised by that. 1.15, not a surprise at all, because if you just examine what has happened historically, you'd see there was a collapse, a consolidation, a collapse. We went into a consolidation, and now maybe we're lining up for another collapse. But if you go down to the daily chart, I think there's a potential of a move higher a bit. Again, some bear market rallies which always take place. So we've seen a collapse to the downside, and we've seen this pullback from 1.2. Where do I think it will stop? I think 1.25 will be hit ultimately. And if I just go down to the 4-hour chart, I had sort of a consolidation the whole of last week. Prices did nothing really much other than move sideways. But I think this week we could see a touch of 1.25, and even as we head to 1.25, we could see 1.2450, which is the next upside target. But if we break to the downside, which could also happen, then we could see a move downside. But I don't want to see some things before I commit to the downward breakout. Probably a collapse of 1.225, break of this consolidation maybe, for me to pivot from long to short. For now, I think I'm long, as much as I'm not in the direction of the trend. The yen has been the weakest market across the board. I think on the currency pairs, especially the yen, has had some significant weakness relative to other markets, and I think that is bound to continue. So we could see euro yen in particular trading as high as 145, 147.5, 150 in the extreme cases could also be hit. And if I just go down to the 4-hour chart, you can see clearly markets have been moving higher for quite some time. So we had this move to the upside, a correction which came back to this level. Now it looks like markets are pricing in a move to the upside again to the 145 level, which is the next upside target. So here, as long as we're above 142.5, I think I'm still remaining positive on longs, and I'm looking for the 145 level. To sum up, I look at what is happening on the dollar. I think the dollar is one of the most significant markets. You need to understand what is happening there. It has had a very strong bullish rally as rates has been moving higher. If I just go down to the daily chart, you can see clearly we've had a strong bull market. I'm still waiting on the bull market going on. So unless the bull market is nullified, and I'd want some signals, for example, a good close below 102.5, a break of this trend line, a nullification of the higher lows and higher highs, all these things are still not evident. So as long as they are not evident, I'll remain long, and I'll be looking for these markets to come back to 107.5. So what am I watching? I'm watching for potential bounce on this trend line. That's also a trend that could play out probably as we head into next month, especially relying on how the pivots will open. We can know how to position ourselves. Finally, I will look at the US bond yields. So bond yields, this is a reflection of where long-term rates are going. So anytime you hear an inverted yield curve or a flattened yield curve, what you're basically talking about is where the markets are headed. And if you look at the 10-year yields, we had a move to the upside, a correction, a move to the upside, a correction. Now it looks like we'll have a move to the upside to the 3.8, 3.9 level, which is the next upside target on this market. So if this level holds, then bond yields could keep rising as rates are going higher, and that could mean markets are pricing in still an aggressive rate hike. So I think I can stop there. If there's any question that you have, you can share it our way via our comments. We can work on it. If you have any suggestions, then you can also pass it on to us and we'll work on it. So with that said, I'll stop there. I wish you the best in your trading week, and may the pips be with you. May you have a profitable week and not a losing week. Peace.
Thank you very much for watching Financial Hub's content on YouTube. For more forex analysis, financial education, podcasts, and exclusive content, be sure to subscribe.